AM Best had a negative outlook on the U.S. excess and surplus insurance segment last spring with the surge of the pandemic. Now it's revised that outlook back to stable. Here to discuss the rationale for that is Robert Raber, AM Best Director. Robert, what are the driving factors behind the outlook revision back to stable?
Well, the primary factors that led to the revision of the market segment outlook to stable for the surplus line segment is their ongoing overall profitability and their growth prospects on their top line. AM Best's surplus lines composite data through the third quarter of 2020 showed that the composite as a whole is recording underwriting profit through that period and was recording a combined ratio of about 95%. We also saw that the premium recorded by the state stamping offices for the full year 2020 was up significantly compared to 2019, almost 15%. And that indicates to AM Best that the conditions are good for obtaining favorable rate and for exposure per risk. When we moved the outlook to negative last year, we noted in the pandemic conditions concerns about cash flow, claims development patterns, and the investment market conditions. Looking through year-end 2020 and forward into 2021, we're seeing that cash flow has been very stable for surplus lines carriers. The claims environment, although still a challenge, has been pretty stable. And we saw that the investment portfolios for the surplus lines companies weathered the investment conditions.
What surprised you as the E&S sector moved through 2020?
Well, I think the biggest surprise I had with this was the economic ingenuity translated into the continuing need for insurance coverage. In the pandemic conditions, many businesses had to pivot from their traditional in-person shopping, dining, entertainment type experiences to walk up, delivery, online shopping, virtual performances, or even having events with limited capacity. And since they were still functioning and still operating, there was a continued need for their insurance coverages. Premiums were paid on time. Coverages were updated and modified based on different shifts in exposures, and policies were renewed. So we really saw a continued need for surplus lines coverage. Another unanticipated factor when the pandemic started was that there would be some pockets of demand in certain parts of the market. The example I like to use is artisan contractors, carpenters, painters, plumbers, roofers. As the pandemic got underway and people started working from home, they looked around their house and said, hey, we need some things fixed around here. So when those contractors came in and did the work and started working on homes, either they stayed just as busy as they had been before, or they were busier, which for them meant a need to sustain their insurance coverage, pay their premium on time, maybe have to talk to their surplus lines carrier about they're even busier than they were before for any products that were based on volume. So there was also that kind of pull, a little bit of a pull for that need for demand there also. I think the thing I find most interesting really is that the number of new businesses that have been noted as coming online during the pandemic conditions. Surplus lines carriers have always had new and unique risks as part of their portfolio. So as new businesses come online and they look to the surplus market for coverage, there continues to be that sustained level of demand there for new submissions to surplus lines carriers throughout the market.
And what do you expect going forward for the next 12 months?
Well, that's a good point because, once we've changed the market segment outlook here, and just to make the point, what that means is that AM Best expects the market trends to have a neutral influence on companies over the next 12 months. We're seeing signals that the surplus lines markets are going to continue down the path of premium growth that they had established prior to the pandemic. Back about 36 months ago, we were seeing in the market accounts that had unfavorable experience, both with standard and non-standard companies facing non-renewals or rate increases or changes in terms and conditions as carriers applied a greater level of underwriting emphasis on their books of business to look at underwriting profitability. Now, while there was a brief pause when the pandemic started as companies and distribution channels got used to working from home and those kind of environments, we saw the volume pick back up again as traditional carriers continued to apply underwriting criteria for the best performance in their books of business. And that traditionally has been a strong spot for surplus lines carriers. The other thing we're expecting this year based on multiple industry news items that we've seen, is there's going to be a couple of new surplus lines participants entering the market. We've also seen some news that some existing surplus lines carriers are looking to fine tune their risk appetite. So that indicates to us that there's a healthy interest in the surplus lines market, and that's going to help maintain and maybe even get a little extra capacity out there for surplus lines carriers. Now, we do have a couple of concerns for the coming year. In general, social inflation remains a risk for the industry. Coverage creep, as claims that could be related to coronavirus and COVID-19 conditions can be out there in the market. Specific surplus lines companies, maybe some extra capacity comes online that causes some disruption in the conditions. And of course, society as a whole needs to get through the pandemic. So, there's a lot of factors out there that could still have some adverse effects. But, pretty much in a summary, surplus lines market companies have had a strong foundation of, underwriting acumen and recording successful performance in challenging conditions. And, we believe that we're going to see them continue to do that, stay down that path as conditions play out in 2021.
Robert, thank you for speaking with us today.
Thank you.
We've been speaking with Robert Raber, AM Best Director. To view the full report, visit ambest.com. For AM Best TV, I'm Meg Green.